Good evening, good afternoon, everyone. Welcome to another episode of the Jason's Take On podcast series. We've got myself, Jason Noble, here in London, wet and cold, and we've got Jason Whitehead over there in Washington. Say hello, Jace.
Hello, Jason.
We have a very special guest with us today. I'm sure many of our listeners will have heard of him. It's Rav Daliwal. Rav is a venture partner at Crane Venture Partners. He has a significant amount of experience in the customer success space. He's a public speaker in customer success, an investor. So I think you position yourself as a former software executive turned investor, Rav. But Rav's going to talk to us a bit about kind of the VC's perspective on customer success, which is a topic that I'm sure a lot of our listeners will be very keen to understand a bit more about. And I think Rav brings a very unique perspective, how to come across from many businesses, hyper growth businesses, taking them through to IPO, to public sale, seeing them set up customer success functions, and then turning to invest himself. So really unique perspective. So I'm really excited here to have you with us, Rav. So a big welcome to you. Thank you for joining us.
Thank you so much, Jason, and thank you for that intro. I mostly describe myself these days as a recovering software executive. I feel that's a little bit more accurate, but it's good to be here. And as Jason pointed out earlier before we started recording, that I'm also in West London, about 1.5 miles from Jason. So hopefully next time we get together, we'll be able to do it face to face.
That's what I think most of us cannot wait for that day.
Yeah.
And thankfully, with the vaccinations, it doesn't look that it's that far away. We're still somewhere to go.
Crossed.
What I'd like, Jason, I'll just bounce normal questions over to you, focusing on all venture type questions. But just give everyone a quick intro to yourself for people who don't know you, your background, the great things you've done, and what's brought you to where you are today.
Yeah, absolutely. Again, thanks again for inviting me along. I've been really looking forward to speaking with both of you. My background's pretty straightforward. I've been about 20 odd years in sort of enterprise software. I started my early part of my career with all the very large, big usual suspects, IBM and Microsoft, and Salesforce wasn't that big then, but obviously it became big. I was there, it was less than 3,000 people, but it was still a big company. And then for about the last 10 or 11 years, it's been pretty much, this is not by design, by the way, but it's just been very early employee at very early stage startups that kind of went on to big growth and exit. So I was very early at a company called Yammer. We eventually got acquired by Microsoft. I think it's still the fastest $1 billion plus exit in the Valley. It's certainly in enterprise software. And then after that, I was lucky enough to really work with a wonderful group of people at Zendesk. If there ever was a customer focused company, it's that one for sure. Amazing experience. Obviously that went public. And then I found myself as the first UK employee at Slack. That was quite a unique experience. I was reasonably instrumental in convincing the company that the CS function was needed, and I was tasked to go out and prove that. And I believe it's like the third biggest part of the organization now after engineering and customer experience. After that, then this is all very exhausting, by the way, just doing this, and one gets a little bit older and a bit slower. And I had a relationship with the team at Crane, where I'm a venture partner, as you mentioned, Jason. And just through knowing the team there and helping them out on bits and pieces informally, that relationship started to become a little bit more formalized. And so now I spend a lot of time working with the investment team on looking at new opportunities, but also actually the fund's focus is really on go-to-market and actually helping people. It's quite unique as well because it's an enterprise fund. It focuses only on enterprise tech and helping people to accelerate go-to-market. So I spend a lot of time working with founders and leadership teams on helping them think through business problems. In a weird way, it's really just doing customer success, but instead of selling software, we're selling cash. So what we're trying to do, like any good CS group, is we're enabling people with money, and then we're really working closely with them to help coach them, nurture them to use that money the best way possible to achieve their goals, and so that we can achieve our goals. So I sometimes describe it as I'm in the founder's success business now with the rest of the team. And so for me, it's felt like a very, very comfortable, very logical, move into what I'm doing now. And certainly my background and experience has been incredibly helpful as an investor, because I tend to look at companies through that bit more of that operational lens.
I think that's such a fascinating background there. And it really, I love the way you're still doing customer success and the way you position it, because it's something that Jason and I have spoken about before. I think we're very privileged working in customer success, that it isn't just about our customers. You're there to make other people successful.
Yeah.
And it's a really wonderful position to be in. And actually to see it, you're showing this in reality. Actually, you're there to make investors successful.
Yeah.
With your background then in customer success, I think we've already talked about, and these high growth companies, and you've seen some phenomenal companies that when everybody knows Slack, Zendesk, these are tools that I use them day in, day out. A lot of people do. You've got this really unique perspective as to what makes good customer success. What are the key things, or some of the key things then, that now in your role as a venture capitalist that you're looking for in companies when it comes to setting up customer success functions or even investing in them? What are some of the key things?
It's a really great question. First of all, you look to see if they actually have one. I think that's the key thing. And I should just point out that one of the reasons why I feel so fortunate is that everyone, certainly at Crane, is just philosophically, as investors, aligned and understands the importance of the success profession, and the fact that the team recognize, well, actually, this is a gap where we haven't got the skill set to be helping, and how can we work with somebody like Rav and the people he knows to help fill that gap. So I feel very fortunate. But in terms of what we're looking for, really, it depends on what stage the company is in. If you invest very early like we do, sometimes there isn't even a product. So you think, well, if there isn't a product, why do you need customer success? But what you really are trying to do then at that early stage is you're trying to accelerate what we call product market fit. So for some of the audience, you may have heard that term. What that really is saying, we have a hypothesis about the value that we add as a product and solution, and we're building based on that hypothesis. But we really, because we're early stage, we don't have a lot of money, we don't have a lot of resource, we really need to be very fast about how we test those hypotheses, prove them or not prove them, because what you don't want to do is build the wrong thing for the wrong people. And so at that stage, you may not call it customer success, but you are typically have people, sometimes it's the founder, sometimes it's the product team or the product leaders, who are doing that role as well as building the product and interfacing with customers and finding out what add value, what doesn't, what problems should we be helping to try and solve. So we look for that to say, actually, if it's an early stage company, what are they learning? One of the key questions I like to ask is, what have you learned from the customers you've spoken to so far, whether they're paying you or not paying you? Mm-hmm. That's a really good signal to say, actually, are they thinking about building towards this hypothesis? When you get into sort of the later stages of investment, the Series A, Series B, the company has hopefully product market fit or close to it, or they're getting in it in at least one or two customer segments. And what they're doing now is they're building a commercial organization. Some people refer to that as go-to-market fit, marketing, sales. And if they're talking to me, I'm saying, no, that's marketing, sales, and success. You have to think about all of it as a continuum. At that stage, you then you have more basic data, right? So then you're starting to look at some of that unit economic data. You're looking at things like net revenue retention. If the company's been selling product for a year plus, you may be looking at things like what's called the LTV to CAC ratio. So this is the ratio between the lifetime value of the customer and the cost it took to acquire them. And there's certain benchmarks. Ideally, you want the lifetime value to be 3 times the cost of what it took to acquire. If the company is really accelerating and it's a later stage investing, you'll also want to have a look at what we call the payback period. You may have decent long-term value to customer acquisition cost ratio, but you want that to ideally pay back in 5, 6, 7 months, not 18 months, 20 months. So there's a gamut of metrics. Like I say, very much what you look at depends on the stage. Sometimes if it's a new category, there is no product yet, or the product's being built, the only thing you can look at is the total addressable market, or the TAM. And you can say, well, actually, if they pull this off, if they build something, what's the size of the product? It really just depends on the stage. But what you're really doing is you're looking at data, or you're asking these questions to determine, are they thinking about, or are they learning things from customers that would indicate to you that they are thinking not just about optimizing for selling once, but for continually selling.
And just even at a high level, how are you finding the market right now? Because customer success has changed so much over the past 5, 10 years. Are you finding that most of the companies that you're coming into, that their founding team already is thinking along those lines and already thinking about success, or is it a new concept that you're bringing to them even at this stage?
Yeah, it's interesting. You might hear a sound here as I drag my soapbox over to stand on it. One of the challenges is with customer success is no one actually really knows what it is, right? And the reason that nobody knows what it is, there is no industry definition for it. And one of the things that I've been doing in a lot of the conversations I have with founders, whether we invest or not, is it's contextual. So what it'll take to make your customer successful is likely to be very different from what it takes for this company or this company. But at its core, what you're really trying to do, whatever you call the function, CS, customer experience, whatever, is you're trying to help them see value, the more value they possibly can derive from your solution, but quicker than if you left them to their own devices.
Yeah.
Really, that's what you're trying to do. You're an acceleration function. How you do that is often where I think CS practitioners get hung up, because they talk about the how, right? Or the activities they do. But really at the core, what you're trying to do is speed up the time it takes for them to see value and work with them so they see more value and realize more value than they possibly thought they could. And when you explain it to people, then they get it, right? They go, oh yeah, okay, that makes complete sense to me, because if I do that, then I'm going to get more money from them. Brilliant. Or even if I don't get more money from them, I can worry less about the revenue I already have for them. Because if you look at that customer acquisition cost, if you lose $1, you're going to have to find anywhere between $2, $3, $4 just to make up for the loss, right? Before you even actually start making more money. When you explain it in those terms, people get it. But the challenge is you have to explain it. There aren't too many people. If people do come to you saying, oh yeah, we know all about success, blah, blah, blah. It's normally they have a model from somewhere they've worked before, or someone they've talked to in the industry who said, oh, it's like customer support, or it's actually, you give them all the stuff that doesn't fit anywhere else and they just deal with it. And that is part of the thing that I'm trying to address in the position I'm in now, is how much can I influence, educate, not just investors, but entrepreneurs, to start baking this into their thinking about how they build a company.
That's fantastic. I love that. So putting a current spin on this as well too, 2020 has been such a challenging year all the way around, and customers are doing, or companies are doing some great things with customer success, but they're having to tweak it up. And we've seen over the past year, changes in people and the process tools and where they're investing and where they're focusing given the current things. What over the past year or so have been like the biggest changes you've seen in how customers are approaching customer success? And how do you think that's going to change coming out of this whole COVID timeframe?
Yeah, I think big sort of macro shocks, like whether they're economic ones or pandemic that we're going through right now, my experience has been they tend to act as an accelerator. So there tends to be trends there, and then they suddenly get accelerated because there's this big macro change in the business environment. And one of the accelerations I have seen is there are more and more entrepreneurs or potential entrepreneurs looking at CS as a use case and going, this is actually a part of the funnel in sales that doesn't have a dedicated tech stack. It's borrowing and stealing bits of capability for wherever it can. It's well served with CRM, but CRM is an existing category that's been retrofitted for the success practitioner. I'm talking to almost every week, someone's going, I'm building for the CS profession. That seems to have really accelerated. And I think that is part of a recognition of, certainly if you cast our minds back to last March, which is really hard because obviously we've all lost all sense of time and proportion, but last March is, let's say that's lockdown month. That was a kind of major seismic shift and panic. And a lot of companies and a lot of founders went, I've got to double down on my existing customers. I never really think about them. I'm always thinking about sales, or my investors are forcing me to think about ACV. But all I got right now, at least for the next 6 months, is my existing customers. And suddenly there was this urgency to understand, what does this team do? How do they do it? What do we need to do to support them? Because we've got to keep every dollar that we've got. And I think that has accelerated the tooling discussion. And I think that's a trend I'm continuing to see. And that's a trend that I'm personally actively trying to promote, whether that's with connecting people or angel investing or whatever, because I think it's really important. And I think also part of the reason why it needed that acceleration was because there's no definition for the function. So if there's no definition for the function, how would you ever build any tools for it? You know, you just, everybody on sales, you don't have to be in tech to understand sales. What do you do in sales? Oh, you ring up strangers and ask them for money. I know what you do. Most people understand engineering. Most people understand marketing at some basic level. But if you don't actually understand what a function does, why would you ever build tools for it?
Makes it even harder then when you're trying to select, when you come in and as a customer success leader, people say, I need tools. What tools? And they're going out there and they don't know. And there's all these different platforms and services, but they all address different needs.
Exactly.
And I think it's it is, you're so right. We've seen such a boom in that market. There are all the big players that we know about that are continuing to mature and they're as thought leaders, but there's a lot of early players that are coming in with some very interesting different technologies and different areas that they can add value on. Yeah,
for sure. I think to date, pretty much what's happened in the CS profession is we've either built software which is an existing category, but it's been built to help CS practitioners, or we beg, borrowed, and stolen little bits of components of other tools that were designed for other things to get our job done. And I think that is the shift I'm starting to see, where it's actually, this is a function that drives net revenue retention at its core. That is actually the key SaaS metric. You know, if you want to become a big successful company, we should have some dedicated tooling, or there should be people building dedicated tooling.
You know, I'm wondering as well too, how you spend a lot of time looking at the CS capabilities and perspective that prospective companies that you might invest in have there. I'm sure between that and your other experience, you've seen a wide variety of how you have CS, or you say you have it, but really it's for just under a different name, or it's sales under a different name, or something like this.
Or it's account management under a different name.
Yeah, whatever it may be. So there's so many different flavors of it. One of the things that we've talked about is in the future is that we think that CES is going to be more of a competitive differentiator for companies. It's like, you know, your ability to actually prove that you can create value and to retain customers because of it. When you're looking at companies as an investor, to what degree are you really getting into the meat of things to really understand how is this a competitive CS capability, or do they have the potential to get it there? Or to what degree is it, we don't really go to that one?
That's a terrific question. Again, it all depends at what stage you're investing in, because at the earlier stage, there isn't really much happening in terms of commercial traction. So diligence of a company at that stage is going to probably be much more geared towards technical due diligence and market sizing, as opposed to maybe at that later stage where there are unit economics to look at. What I can tell you to answer your question, Jason, is that I, with a lot of portfolio companies, and I look at sales pitch decks and first call decks and say, where's the CS slide? Well, what do you mean? That's a massive differentiator. You need a slide in there. Right. Well, what should the slide say? I think customers really like the fact that you're going to offer them resource that lowers the risk of the purchase, minimizes their effort, and quickens the time to value. I think they'd like that. Yeah, we should put that slide in, right? So, I do spend a lot of time working with CS leaders on helping them to shape that message so that it's part of the overall proposition of the product or the service, because it's a major differentiator. And what I just described there, less effort, less risk, faster time to value, that is the business model of every single giant consulting company in the world.
Do you see, when you're having conversations with these early stage companies about this, and they've got, I mean, do you find most are missing that slide? Are you seeing that shift and people are beginning to have that? And there's already something around customer success they're doing and they just need guidance on that? Or are you still seeing lots of gaps where it's still a kind of an alien concept for many?
Well, I think at that early stage, Jason, where, like at the early investment stages, they're still figuring out the value of the product and building the right thing, and actually selling is what I like to call bespoke selling. It's normally founder-led selling, and they're just, every deal is bespoke. And this might be a 10, 20K MRR business. They're still very much in the learning mode. So at that point, without them realizing it, from a quote CS perspective, even if that's not what they're calling it, everything is white glove, because they've only got half a dozen customers, right?
Yep.
So everybody's all hands on deck, and everybody is giving all these customers a ton of love, because they're also then figuring out what function to build. Normally, if we've done our job and helped them on the go-to-market to accelerate that after investing, then as part of that proposition, then we can help them actually to formalize that and formalize a charter for the team and position it as a sales differentiator. But at that early stage, they're doing probably white glove, high touch CS without even realizing it, because that's just what it takes just to deploy the software and get people to use it. We invest in what we call deep tech. So this is complex, often middleware type solutions that really make use of data. So tends to lend itself to things like machine learning and AI-based solutions. These are often very complex technologies that require integrations and all sorts of other things. So even if you're not calling it services or CS, you're doing it anyway.
I think it's fascinating, because it is, when you look at kind of products, and you said earlier on about how the beginning of last year when COVID hit, a lot of people suddenly knuckled down and say, what do we do about our customers? But I think that there was a lag with that as well, wasn't there? There was a beginning part where people were thinking about sales, and suddenly it took them a couple of months to really switch gears and actually
shock.
but it seemed to take time. And I think now we're in a much far different position to it was 12 months ago, and businesses are still now saying, yes, it is about the customers, but there's still, some of them still struggle with it. And it is, I know in conversations I have, you're amazed at times as to how can you not be positioning this? And it does that white glove treatment thing. I see it time and time again. And the challenge you've got then is, how do you scale?
Yeah, exactly.
You cannot do that the founder being involved in everything. You cannot do the whole team being involved. You've got to have processes and systems that allow you to do it.
And if you have a good investor, they'll be telling you that or coaching you on that and go, well, actually, do you need to think about on the product roadmap, building some of this capability in so you don't have to do all of this stuff, you know, and that's what, if you're a good investor, that's what you're trying to do. You're trying to help them think through go to market, not as a sort of, oh, we have product engineering, sales, marketing. You're trying to think of it as a continuum, because one of the things that I'm very fond of saying to founders is there's 3 types of selling. There's inbound selling, which is what tends to happen at the beginning, is, or if you're a self-service type model, people are coming to you and you're doing that founder-led sales, or you're just all figuring it out. You get good at that, you formalize it, you start to build a sales organization. You got outbound selling. We're all familiar, pipeline, revenue, forecasting, closing deals, targets. But there is a 3rd type of selling, I call it continuous selling, which is actually when you sold the first time, how did you set yourself up for the next deal and the next deal and the next deal? You're not going to get any more deals from that company if they didn't see value quickly from the first thing that you sold them. And so sometimes framing it like that, saying there's 3 ways to sell, inbound, outbound, continuous, that can actually be easier for founders to understand, because, oh, okay, that makes complete sense, because we're not selling them a perpetual license and they're putting servers into racks and we're not flying a bunch of people to install it. You know, it's subscription. If I can think about it as a continuous sales motion, that can conceptually make it easier for early stage companies to understand.
There's so much to that. I think a lot of the work that I do work with companies is just find ways to put it in the language that they can understand and get them. Yeah. I really like the continuous selling piece. I think that's really great.
Yeah, my job basically is to exaggerate and amplify. That's entirely what I try to do is let's exaggerate this so you understand it, and then amplify it so the importance of it becomes apparent.
Yeah. So we've covered a lot of good stuff here, and I'm wondering, what advice would you have for a new founder? And it may not be that they're in an early stage, maybe their first time founding a company, yeah, and maybe a little bit past that when they encounter you. But there's someone who they're starting up, they've never really done this before, and you like the product and their vision. What advice would you give them about when it comes to setting up customer success in their organization?
Yeah, it's a terrific question. So I would probably, again, we talked about it already. I was posed the question is take the time to figure out what it is that you can bring to the table that accelerates value for the customer. So what skill set is that? Is it DevOps skill? Is it regulatory knowledge? Is it change management and digital change management? Whatever, it might be a combination of things. That's the thing you got to figure out before you build the organization or go and hire some big company VP of CS. Because you see that problem all the time as well. We didn't know what to build, so we went and hired an SVP from this giant corporation. And that person goes, well, I don't know. I've been 15 years away from figuring stuff out. Oh, and I'll just go hire back all my lieutenants. They'll figure it out. And they can't figure it out because they go, well, we just know the playbook that you taught us, so we're going to do that playbook. So that's the one thing I would say is just figure that out. That's a series of experimentation hypotheses, try it out. Then work out what you can productize and what requires actually people. But then I would also say have a North Star of what you're aiming for. So in that early stage, you guys will have seen this, right? You go talk to a company, sales leader, VP sales, what you measured on that person. So, well, ACV, stupid question, right? Marketing leader, what you measured on? Well, MQLs, what stupid question. CS leader, what you measured on? Oh, I measured on gross net churn, NPS, CSAT. And they'll give you like 7 different metrics. And I think that's a function of people not understanding what the function does. So it ends up owning everything else that nobody else wanted. Founders would do very well to say, I want the North Star of this team to be fast time to value, because that's what we're trying to figure out, right? In that early stage. So I want you to get customers deployed and using the product this way in 30 days or 60 days, and make that a target, make that a measure. As that becomes well understood, more productized, more systematized, give them a revenue metric, net revenue retention. I want you to create the conditions of product usage where sales are coming back in and selling more, right? And I want that metric to become more important. So I would say, try and understand that value that you're bringing, and then try and have a North Star that you're aligning to. I think.
That's very cool.
There's about 500 others, but the thing is they have they have like another 1,000 things that they're trying to figure out on a daily basis anyway. So,
I like one of the things you said earlier about the early stage people. They don't even have a product all the time.
Sometimes, yeah.
Sometimes they don't. And then as they're moving along, when would you recommend a founder start to devote time, attention, and resources towards starting to build out that customer success capability? When is that? Whether
they actually build it out formally or whatever, if they're not actively talking to potential customers to test those hypotheses, then I would worry about would I even invest in this thing? I was on the phone this morning with a young group of entrepreneurs, and they have an idea of what they want to build, and they've spoken to 180 potential customers to try and validate some of this idea. And yes, that's what you should be doing. If it's at that stage, you and I think maybe the listeners probably wouldn't think of that as CS, but that is a CS style activity. You're, instead of actually trying to drive adoption or usage, I'm trying to accelerate my product market fit and test these hypotheses. I'd say you need to really, it's valuable from day one, even if you're still actually building the product. It'll just be called something else.
Are there any warning signs when you're looking at investment that you guys are making in different companies? Are there any warning signs when they're not doing the right thing? So if you saw someone where they weren't engaging in customers at all, the founders weren't out there looking for that feedback, are there any things that play into what companies you wouldn't invest in?
Yeah, well, I think things like or no deployments. We sold this, it's been sitting on the shelf for ages, or we just can't get it deployed. Being stuck in what we often refer to as pilot hell. So we thought the name of the game was to do pilots, and it's no, the name of the game is to get people to buy the product and use it. And that's another signal. I think there's the obvious ones. You're not holding on to the revenue that you are closing. There's a leaky bucket. Your net revenue retention is below 100. That's a sign. Now the company may not have had that longer time yet selling for that to have materialized yet, but if you're just going through the pipeline with them, they're not confident about the renewals. I think that's a signal. Not having a clear understanding of who the buyer is and who the user is, and therefore you can often see that through the marketing and the messaging. It's a spray and pray. You actually haven't figured out yet who this thing is for. That's I think another sign. And I think another one is just not being on top of data. We have no usage telemetry. We don't really know how people use a product. I think we haven't thought about the fact that it would be a good idea to see how people are using it and at what frequency. I think now that could just be an oversight because they have got limited resources to build, and it might be on the roadmap. But if they haven't even thought about it, that's often, for me anyway, that's a little bit of a trigger. Yeah.
Wow. So, I'm wondering, with the work that I do with my business partners, we spend a lot of time also working with the end buyers of technology, helping them to drive change and adoption and all that good stuff. Because what you said earlier is, I think, so true, is so many buyers, they struggle to get their people to use technology in a way to create value with it. And I think that's where CS comes into play. The whole reason we have CS is because if the buyer could get value on their own, they wouldn't need us, kind of thing. How do you see that changing, or how do you see the demand or the nature of CS services changing over the next 5 to 10 years as theoretically buyers of organizations get exposed to a lot more CS practices through all their different vendors and maybe get a little sophisticated either in their buying of CS services or even the amount of need that they need once they get better at some of these things on their own?
Yeah, it's a really interesting question. And in fact, actually, one of the previous questions there from the other Jason, the UK Jason, was some of the warning signs. One of the things that I always like to try and assess when I talk to founders is what is the size and scope of the change impact on the customer of your solution. So if they actually, so there's no real change impact because it sits in the middle. So really, it's just like 20 engineers who've got to plumb it in. Great. If they say, well, actually, it impacts like 10,000 people at the company, what are you doing to think that through then? Because that's going to potentially be very resource intensive. That's normally when the founder will say something like, hey, this product's so simple, everyone's going to get it. And I just laugh inside. You're a power user. You use this thing every day. You want to use it. Companies are full of people who aren't power users, have been told to use the product. It's a completely different problem. It's a long-winded way of saying, I think that over the next few years, I think there needs to be, both with leaders and founders and the CS profession, much more skill set developed around digital change management. Because when the friction in buying the software and actually deploying the software or standing the solution up is getting lower and lower and lower, there's so many products out there, you don't even have to deploy anything. You just swipe the credit card and away you go. There's nothing to deploy. You've got to be thinking about, how do we actually help this? How do we assess first what the impact of the change is to the way this person works, and how do we minimize that gap? Is that people? Is it in product? Is it collateral? Is it a number of things? On the internal side, it's recognizing that, but it's actually, I get asked this question a lot. What skill sets do you look for in good founders? And there's varied many, but the one I always recommend founders, the muscle they try to exercise, is get really good at change management, because really your job as a founder is trying to absorb, adapt, and deal with constant volume of change every day. So even if the change impact of your product's low or the scope of it's low, if you're going to build a company, the change impact you're going to have to deal with internally is enormous. So just get really skilled at that. And then I normally send them something to read about the ADCAR framework or some other change model. I go, just read this, at least you'll understand what I'm talking about. So I think that it's increasingly going to be an important determinant of not only making customers successful, but actually the company being successful as well.
It is quite often one of those missing links, isn't it? And I think any role that any of our listeners that are in customer success, just an understanding of what change management is. I mean, it's a discipline in its own.
It's a discipline focused on behaviors, not tasks.
Absolutely. Right. And it requires a very different way of thinking, but there are some skills, like you say, looking at these different frameworks, different books, how it works, that can really help.
I talked to a founder last week, just as a favor to a friend, and they sold this very sophisticated solution for DevOps. And they walked me through the solution. I was like, wow, this is an underserved area in DevOps. Clearly, they're doing very well. And I said, so how do you tackle the problem of companies that aren't working in a DevOps way? And he goes, well, what do you mean? I go, well, just giving them the solution isn't going to make them adopt DevOps, is it? What are you doing outside of that? And they were just silence. And that is part of the problem, which is if you're not thinking about the change impact of the change scope, you could get fooled into thinking the technology is just going to make them change the behavior, the way they work, right?
Never does it on its own, does it? You need that
So
mind.
let me introduce you to another founder who runs DevOps consultancy, and that's all they do. And I'm sure he'll be able to give you some insight into why that's important.
Really fascinating insights there. If we just take a step back, when you look at venture from its own standpoint, and it's a fascinating industry that you've moved into, really exciting, and particularly when it comes to tech, we've seen some amazing growth from people there and some investments. But what are some of the new areas that you see as opening up in venture and new trends and different changes that have happened, the things that are getting you really excited?
One of the reasons why I do what I do now is and apologies, Jason, because I know you're in Washington, but I really wanted to focus on Europe because I've worked in Europe and spent a lot of time in the US, but they've all been, US headquartered companies. So one of the really exciting things is just more and more focus on the talent in Europe. You see that manifested with the top tier VC firms like Sequoia setting up offices in London. So that is very exciting. That's a change. Actually, the focus on enterprise is really hot space. And that was not the case not that long ago. So, that is a change that people are actually doubling down on, looking at enterprise software companies and looking at the returns of some of these enterprise software companies. I think that's a change, and that's really exciting. And then I think from the tech point of view, the importance of data and being able to do interesting things or sorting key business problems out from a data perspective, that is really what I'm very excited about. It's really interesting because having got into the space, what I've realized is things that on paper sound really boring are genuinely best. So when you actually start to go, wow, that sounds really dull. And then you scratch under the surface. And, oh, wow, that's amazing. The technology is amazing. And I can see that's going to solve all these problems. I find that those are the kind of things I think that I'm seeing and that just are really very exciting. If I ever write a book, I'm just going to call it Boring is Best, because the book will just review itself then.
You're so right. With a lot of people you've got to dig into a lot of these technologies to actually see what's beneath them. And it almost makes them that much more beautiful. When the outside of them looks, it just works. It's quite simple and it just does a job. But when you go behind the scenes and you think, oh my God, this is incredible how this works.
Yeah, for sure. I mean, the plumbing of what kind of keeps businesses running, it may not be on the surface sexy, but that stuff is so important, right? Like just the plumbing and the infrastructure that holds businesses up, that runs airline reservation systems, that allows you to do bank transactions, that does insurance quotes. All of this stuff I was asked by a friend to actually just listen in on a meeting. And I said, well, what's the solution? And he told me, it's like, I can't even fake any enthusiasm about that. That's really boring. And then I listened to it and I was like, wow, this is amazing. Like, it's greenfield. There is no technology that actually solves this problem. They've proved that it solves a problem and they can't sign up customers quick enough. Like, it's amazing. And that's one of the things that I really enjoy about what I do now is I just get exposure to such a variety of really interesting companies and technologies. And entrepreneurs are fascinating people. I really like talking to entrepreneurs.
I think that basic plumbing behind businesses, and it becomes so essential and people just expect it to work.
Yeah.
And you talked about earlier on about how can you do things quicker, less risky, and that's what they want. They just want the plumbing that works
Yeah, and I would advocate that if you want to be $100 million, $100 billion, $1 trillion market cap company in software, the plumbing is actually CS, because if you do not have a motion for extracting new revenue from the people you've already sold to, you are eventually going to run out of money to acquire more capability to sell. That will happen. I did have a founder not so long ago ask me, so why is CS important? I'm struggling to understand why we should invest in this. And I was like, tell me how much new revenue you think comes from existing customers at Salesforce. Have a guess. And he was like, 35%, 20%. I was like, it's 73 as of the last financial reporting. And that just blew his mind, right? I'm like, they make all their money, not from new customers, from existing customers. And by the way, that started in year 5. That is not a recent phenomenon. So I think that is the thing. And I think what I'm trying to do is to, in the position I'm in now, get founders to understand it. I luckily work with investors who really understand it, but get more investors to understand it. There is a third dimension to this. I think we need to get more and more of the CS profession to understand it, because I think the profession is so underwater, just dealing with all the stuff that's been palmed off onto them, that they haven't got time to think about any of this. And I think there needs to be a shift at that end before the profession actually is recognized as actually this is material. This is material infrastructure for how we build this company.
I think that's such a good point. It's going to segue into our final question, which is, there's so many things out there as a VC that you're looking for. Are there are there magic numbers or ratios? Because you mentioned a few ratios earlier that you examine, but if the number's below this or it's below that you go to the founder and you say, your CS people should be getting this number up, or you should have CS focusing to help there, so that both the founder and the CS people can really understand the financial impact of CS and where it needs to be focused.
I think I'd answer that question just with a hypothetical, just to not sound repetitious about what it depends on what stage you're investing in. I think if you are a company that has a track record at selling, even if it's a year's worth of selling, and you've got a CS team, but your NRR is under 100, or your deployment time is in many months rather than 30, 40, 50 days, then I would be saying, hey, I think there's something not working here. Now, the deployment time might be fine because it would take 7 months, but we only sell 3-year contracts. And you think, okay, and then you look in and you look at that, actually, there's lots of custom development, et cetera. You can dig into it. But if the pattern that you're seeing on paper is 95, 96, 97, and you normally know there's a problem, because that conversation always starts with, our logo retention number's great. And you go, okay, I'm about to hear but the net revenue retention is not something I really want to talk about. And that's probably because it's under 100. So that's always a key indicator. And again, things like deployment time and the NRR, I think that those are probably two, I wouldn't say they're magic, but if the company's had some track record at selling, you would start to look at those questions, especially if they have complementary capability that they sell people. So if they go, well, we can move you to tier, or we can add more capability or more feature. To just get a little bit of the mystique around venture, there is also a lot more to the people you're investing in than you might think, right? You look at the product, the technology, the landscape. You can look at the unit economics. You can look at there's endless SaaS metrics. At the end of the day, a big determinant of success is like the leadership, the founding team, and the skills, right? So that is actually far more of an important set of variables than might be apparent to the audience listening today.
Probably the hardest one to get right as well, isn't it?
Yeah, for sure.
Absolutely. You can meet these people many times, understand them, but actually, are they right for this is really difficult.
Yeah, and for me, that's where on my experience as being a people leader and hiring people, I look at it as a kind of a similar problem, which is there's competency, ability to execute because of certain things, but then there's the behavioral traits. Are you mature? Are you coachable? Do you have strong opinions, but are they loosely held? And those are kind of things that sometimes you do get it wrong, but when you get it right, you find these teams, they will fire on all cylinders because they've just got the right behavioral traits. But I just wanted to mention that because it can be, maybe from the outside, it can often look that venture is this highly scientific, metrics-driven, technology-driven, deductive thing. There is that for sure, but really good investors look at the team and the people and spend as much time coaching and developing and mentoring them as they do the business.
I love the way you've talked a lot about this aspect that I'd not really thought about in ventures, but it's the coaching. And I think it's such an important thing. And I love the fact that you have mentioned it. Yeah, something that you do.
Well, that's what good investors do. There are
absolutely.
They just go, here's the money and want an extra return.
That's what organizations are looking for. They don't just want the money. They want people to show them how to be successful with this. How do we give you this? 10, 20, 30, 100x return on what you've done.
How do we give you the thing that we have, which is capital, and how do we help you to use that the best way to be successful?
Absolutely.
I'm saying to someone today, I'm really in the founder success business now. That's really how I think about it, because, you know, if they're successful, then, you know, our investment's successful, we all win. So it's the same when you're selling software. You're in the customer success business, because if they're successful with the software, their business prospers and so does yours.
Exactly.
So the challenge is we just have a lot of thinking mindset and organizational structure that was developed in the on-premises era of software, not in the current sort of SaaS subscription. The companies are still structured with these, you know, siloed departments with different measures, but the way we build and deliver software and get people to buy it is completely different. So hence this idea of inbound selling, outbound selling, and continuous selling. That is something I'm trying to get people to think about.
It's amazing that's the case, because it's been, what, 20 years plus now that people are selling the subscription.
Oh, look, I'm not advocating we radically overhaul, you know, the org chart and structure. You need that stuff, because that stuff is designed for scale. Because when you scale, it's not about experimentation and innovation as much. It's actually about predictability, repeatability, efficiency. That's what that structure is for. But there's nothing stopping us looking at how we align and incent people in that structure to make their incentives a bit more geared toward, everyone's incentive a bit more geared towards the long-term value of our customers. So why should I pay an engineer and comp them on when the feature's shipped? Why don't I just comp them on how much people use the feature? That's a simple example. And people tell me, well, that's really radical. It's like, I don't think it's radical. It's just, we're so used to thinking a certain way that's come from 20, 30, 40 years of how we built software companies.
That's the key thing. It is to us, it doesn't seem very different, and actually makes a lot of logical sense, but it's just we're ingrained with.
It's a change management behavior.
That's exactly what it is. Rav, look, this has been a superb conversation. So a huge thank you. And I think this is a topic that we've never really dug deep into with someone that's got the background like you've got. And I think you're.
Well, I'm still learning. Like I say, it's very nice to be at this age and stage of career and learning new things. So I can't profess to be the be all and end all when it comes to venture, but hopefully the perspective has been useful and at least hope somewhat understandable for you guys in the audience. As I say, is that there's broadly three types of people in venture. There are people who come from a finance background, banking, hedge funds, accounting, etc. There's people who are entrepreneurs. I built businesses and I exited them and I made a ton of money and now I'm an investor. And then there's operators, so people who have been in companies, VP sales, VP success, etc., who now work in that space. So I've got that perspective, but I spend a lot of time trying to learn the other two, because that to me helps understand where everybody's coming from. So.
It's fascinating. Look, Rav, like I said, the awesome conversation. What we always like to do, I'll give out a guess, one question, a bold challenge question really for our listeners as part of the podcast, and really provide the listeners with some kind of actionable ideas. And the one we'd like to pose to you is, what would you say the number one area that people in the customer success industry can really focus on to help drive that success and the success for investors as well?
Yeah, the one thing I was we touched on it earlier is define in two very crisp sentences the value you're adding to your customers and to your own company, right? Because it all stems from the definition. If you can actually someone stops you in the corridor and go, what do you do in CS? You go, I drive net revenue retention. How do you do that? I bring digital change management skills to the company, the customers, so they see value in 30 days. That's a hypothetical example, but find your version of that, because unless you have that, everything else is far more complicated. And you also don't have any ability to push back the things people try to give you that you shouldn't own.
Right? Which is the hardest thing, because it's the nature of people. I think we don't like saying, no, that's not part of what we do.
Yeah. And I think the other thing about that is it leans into two things. One, the skill and the value that you're adding, but two, the material revenue outcome. And I think, again, that revenue outcome is another area where I think the CS profession practitioners need to get more comfortable thinking about. When I have a CSM tell me, oh, I'm not in sales, I go, you're in the wrong job. Because if you're in a software company, everyone is in sales. You are just pulling a different lever than the commercial one. You're pulling the value product lever. So it would be my one takeaway is, sit down with your team, sit down with your leaders, come up with a definition. Don't have any flowery language about outcomes and stuff that's a bit existential. What skills do you bring that make the customer see value quicker, and how do you add to your company's bottom line? Those two things.
That's awesome. I love that. Thank you so much.
My pleasure. Thank you so much, guys. It's been a lot of fun. And as I did mention, it's my turn to cook dinner. So I have at least another 2 hours I can carry on talking about that. So.
Well, Rav, before we go, shameless plug. Tell the listeners a little bit about Crane Ventures.
Yeah. Oh, look, we love hearing from entrepreneurs. So if there's people out there that are, looking at data and building solutions on data in very specific ways, I'm super easy to get hold of. We'd love to hear from you. If you are in the CS space or CS tech or digital CS, as I've heard it being coined, I'd love to talk to you just to see if I can help, regardless of any investment thing. Yeah, super easy to get hold of. If anyone's interested in some of the stuff we've spoken about today, I do write about this stuff on Medium and other places, and it's been great. Thank you so much, and thanks for the opportunity in talking about the space.
Huge thank you to you, sir. Really enjoyable conversation.
Yep, thank you so much. All righty.
Stay safe, everyone.
Take care.